All right, traders, this is Christian from Market Trade Group, and this is your end of day market recap for Thursday, the 22nd, with a lot of rain coming and probably experiencing this all over the country at this point in terms of the storm that's either has made it to your area or has not made it to your area. I'm on the East Coast, and it is just arriving right now. So should be an interesting couple of days. Let's get to the market and the storm that's going on there. Well, interesting price action for the day. Theme of the day is, I would say, a couple things. And I've got this spelled wrong, so let me fix that. But we had a couple of reports that were not on the good side. Remember, just the day before, we had earnings reports from names like we had FedEx, and we also had Nike was the other report, right? And the market liked that and rallied. This morning, the market didn't like the two reports. CarMax, which we did see a lot of puts, big size block of puts. Just a couple days ago, which I actually took a trade, couple days short trade in CarMax. I did not leave it on for earnings, but they were spot on with that particular order. And then the other report was Micron, and I think not so much about Micron itself, but just I think in terms of the industry. And that's probably one of the first charts that I'll start with for the day. But that, and then of course David Tepper was on, and people do really listen to David Tepper, and the market reaction. He was talking about how he's short both, or I'm not saying he's short both of these, but I think he said he likes being short bonds, and he also said as a hedge fund being I think tactically short the market too, while the Fed, the old don't fight the Fed, which, we certainly have been hearing about throughout this year. So he, mentioned that, and all the central banks, and, clearly we got a good dose of them over the last week. And no major change from that. So I thought I would kind of talk about a couple things. Number one, let's go over the indices, and then I'll keep this video I'll try to keep this video short, even though I want to talk about a couple things. So SMH, the semis I view as a pretty important group, right? I view them as more important than than the transports. Some people like to, the old Dow theory is that the industrials and the transports, right, those should be kind of watched, and whether or not they're confirming one another. I tend to think that the semis are the new transports, and they're very important. I still think the transports are important too, but I tend to look a lot at what the semis are doing. And I think right now they're inside the value area, but really weak today, down 4% off the lows. I mean, they were really getting hit hard, and you could see the price action for the day on the 5-minute. Straight down, went sideways for a little bit, after taking that next leg lower, and rebounded a little bit. But I don't know if that's something that you could really kind of hang your hat on, because the indices, as well as not just the semiconductors, but the overall indices that we'll look at, they really got oversold on the 1-hour bar. I think the RSI on the S&P was around like a 14 or 15. The semis got to an 18. So, when things get that deep oversold, usually, you don't always need to get a bounce. Sometimes they can just kind of move up just a tiny bit and go sideways for a little bit, and that burns off that oversold levels. But yeah, that got pretty extreme. But yeah, I would watch this 200 or 201.60 level, and I think if they break down, it's kind of just confirming what we're seeing right now in this market, that it's just pretty overall weak, despite yesterday's move, and clearly no follow through from that move yesterday, which is a bit disappointing. Let's move to the S&P. Notice that. So this is, coming from my write-up this morning. Let's just mute this here for a second. Yeah, so here's the chart, and I put these charts out for members every morning in our in our Slack channel. But, here's what I thought this morning is that, while we did take back, one of the moving averages, like the short-term 5-period moving average, we just are contending with a lot of overhead resistance. And I thought the 50-day, seems very much a clean move back into that 50-day moving average resistance and kind of stopped right there. I don't want to say that was a warning signal. It just kind of, we stopped right there. And you could kind of see how this developed. We're right now honoring this. Price action is really honoring that 50-day moving average and was not able to get back above rejected. And also basically took out the lows from this week. But obviously rebounded, but we didn't get too far, in terms of like from a technical standpoint. We did not get back above 38.52. Now it's only 5 handles away. It's close, but I would say, and I already started to point my eyes down here to say, hey, watch this 37.33, which ultimately, could be where we're heading. Of course, the last week of the year is a better seasonal period, but I kind of view seasonality as just one piece of the puzzle, right? I don't make all my decisions based on that seasonality. I think we got bigger concerns on our hands besides, oh, we got a big seasonal week, the S rally, which I'm not even going to say because I'm so tired of hearing about it. But that's kind of where we are. And this also looks like, if you look at this pattern, right, it does look like some type of head and shoulders pattern, but we're back into this range, this particular range. And if we can't hold here, then I think that we could, begin to kind of see this move down here. So that's kind of the negative. IWM, which had some strength yesterday, this actually did bounce back the most, but just from a technical picture, and that's another seasonal trade, is small caps are supposed to outperform, which I think we talked about yesterday, and it's a tricky type scenario when you're thinking about, okay, well, maybe you can rally a little bit more, but then you got to kind of pump the brakes because you're hitting resistance here. So I don't know if that's going to come back into play. It was a nice move off the lows, but I don't know if that you could really get that enthused or excited. And just realized to kind of what this market is right now is there's some good day trading days, right? If you can be very nimble, so again, just trying to give you a sense of where there is some alpha and opportunity in this market, is to be able to day trade both sides of the market, right? You have to be fast, especially when this market opens. It doesn't really give you like, if you wait a little while to short this market when it's going down, you may feel like you're chasing to the short side, but it really moves pretty quickly. There's one thing that I thought, when we were giving our pre-market session this morning, we were just kind of consolidating around here before the open. Let's see if I can get this right. Yeah, right in here. And it just looked like that this wasn't going to happen. And you could see this whoosh down. We didn't really even blink at this version point of control 5-minute version point of control takeout. And then we kind of hung out here. And this was basically starting at 10:30 today till about 11:30. So for an hour, we went sideways. And usually if we can't rebound off of that at all, it's usually not a good sign for the day. And I actually put on I put on a synthetic short once we broke this, right? Once we broke the lows for the day, I just thought it was very easy to put that on. And if we got back into this range, I would take it off. But that worked fairly decently today because I didn't have a lot of shorts on coming into today. But here was the SDS, and I put the commentary in the trading room that, so again, it's tough to really make a lot of money, in terms of like, this thing doesn't move like $3, it moves like $1, but you could size it appropriately knowing that, right? And I think, I got out of this once I started to see that we were going to rebound a touch, and then kind of moved from there. Here's my other trades. Again, this is what's painful about this, is if you're doing a little bit of swing trading like I am, in the first 15, 20 minutes, half hour of the day, I got out of two positions. Hit the stop on one of them, and then the other one I just said, it kind of trailing stop on a name that I hit. Both of these names yesterday I hit targets on. AXON I hit 2 targets on, but still, you got to be aware of your risk. And I did this the other day where I just sat a little bit too long with a couple names, and I didn't want to do that. I didn't want to dig myself out of a big hole. I tried a little bit of day trading thereafter, and even got stopped out in one of those trades too. So, again, I put a really tight stop on this one, and again, it moved quickly. I ended up losing about 50 cents on that trade, which is, not that bad, but a little bit lower than where I wanted to take the stop. All right, there's the SDS trade. I want to talk about healthcare for a minute. Caterpillar, I thought, was an opportunity today too. Caterpillar was so strong, as long as it was going to basically make it back into the value area for the week, which it did, right? So it's kind of back above that breakout point. And here's what Caterpillar looks like. It did close back above the value area. Perfect, perfect little close for now. So this is nice because I know where it won't work, and that's right around 237. Okay, 237 level Caterpillar right now is, a very strong name, as well as the whole group remains pretty strong, the industrial group. All right, I mentioned I would talk about healthcare. XLV, also, was only down 14 basis points. So outperforming pretty nicely. You got a nice hammer bar there, holding above value. And biotech was strong. Biotech finished green on the day. So, I mean, that's impressive to see something like that. So again, there's some bad things. We talk about the semis, and there's some good things, what healthcare and biotech did. And, I think a lot of people at this time are starting to look at, like, what are they going to talk about? What's going to be their trade idea for 2023? And I have to think that if this market continues to kind of do what it's doing, and we don't have anything new coming from the Fed, then I like healthcare. I think that healthcare and a couple other groups, might be the groups to kind of be in, and might show some leadership at some point for 2023. So it just seems like we're getting a lot of decent setups in those names. And there was some nice, some nice small cap outperformance. Altimmune had another strong day today, up 6.6% for the day. And if you look at some of these movers, right, if we bring up the XBI, yeah, Alt was in there. RNA was another strong name. Just wanted to go through a couple charts if a couple of them popped out, but like ALNY has been a strong name. This name was just down inside day today. CPRX, of course, look at that bounce back for the day, right? And then, a couple of the healthcare names, CAH Cardinal Health, very close to breaking out. I did establish a position today. Another name too in this space that I'm thinking of is Pfizer. Right. Again, not there's opportunities in these cheaper names. This was one of the only charts I put in the pre-market today, because I just thought today was kind of going to be, not a volatile day. I wasn't predicting volatility today, but I just thought today might be a little bit difficult. So Pfizer, I would watch to see if it can just break, continue to turn here on the 5-day moving average, but it found support at the 20. All right, so I was going to talk about, because tomorrow, don't forget, we've got the PCE deflator. That's another gauge of inflation. I know CPI gets so much more attention, and I'm not sure that this is going to be really market moving, of course, unless we get a number outside of the survey, the expectations of 0.1 for the month. But I wanted to talk about this just for a quick second, right? What I find, and again, the market moves. It sometimes right now or what has been the focus is on inflation, right? The focus may be shifting to recession talk. I think inflation is starting to lose its importance, and I think people are getting more worried about how bad is this recession that is getting more probable that we're going to get. How bad is that? I just wanted to talk about this because I find it interesting when you think about the year over year inflation, and the Fed's goal of getting inflation back down to 2%. Take a look at the months. When you look at year over year, right, you're going to be looking at 12 months. Now, some of these bigger prints, June, May of last year, March, they're going to start rolling off, and it's one of those things where it kind of goes to, I'll get right to the conclusion, is being patient, right? And again, this is only one issue. We've got a lot of issues with the overall market. So just because inflation, they get to the number, that doesn't mean the market goes automatically up, right? It just means like, okay, well, this is the one thing less that we have to possibly worry about. But look at the last 5 months, 1, 2, 3, 4, 5. If you continue with this trajectory of, let's say, inflation continues to come in around 0.1 or 0.2 or 1 month with a zero, that takes care of the goal as you get further out and these months begin to roll off. So, because I've heard this comment before, like, oh, we're never getting back to 2% inflation. We definitely could get back to 2% inflation. We just need these months to roll off, and we need more months coming in like we had just a couple of weeks ago with a 0.1. All right, so keep that in mind. It's not mission impossible. It's just we need more time for this to basically happen. And for that 1.3, we're looking at halfway through this year. All right, so keep that in mind, right? And there was something that I saw earlier on Twitter that I thought was pretty interesting. Like, everybody talks about sometimes, the longer term. The longer term has gotten so short at this point. The people think the longer term is 1 day at this point. That's where people's heads are at with time horizon and attention span and so forth. But keep your focus. I think if you think about the long term, and that eventually this may get better as we progress through 2023, you can kind of be ready for when those opportunities arise rather than forcing trades when they're just not there. All right, I'll leave it there, guys. Have a great night. Probably, I would think, no video tomorrow. So happy holidays if I don't see you. Thanks everybody for watching.